Okay, good morning, everybody, and happy Tuesday. Make sure we're going here. Everything looks good. Perfect. Okay. All right, let's get started. Hopefully, you guys can hear me okay. Yeah, excellent. Okay. Good, let's get started. Again, good morning, everybody. Happy Tuesday. Serge Berger here from thesteadytrader.com. This is our Set the Market morning call. And for all you that are brand new, as always, please make sure that you subscribe to our YouTube channel. It's obviously free. You just get updated in real time. When we have analysis, we've got a brand new podcast that dropped as well, which I actually want to point out to everyone as well here in just a second. And also, please give us a thumbs up. That's always very helpful for us, for the algos to pick us up. So, what are we going to look at today? Well, I think we've had a pretty explosive start to the week yesterday after options expiration hangover, and in many ways it may have kind of exaggerated a little bit what otherwise would have been a more sort of normal kind of day. But let's talk a little bit about what's going on. A lot of things are certainly trending very strongly, which is really why we want to respect trends, right? Momentum is different from trend. Let's keep that in mind. If you are part of our morning sessions here in September, we call it Trade-a-thon. You have probably learned that by now. Quick sidebar, here is the link to the podcast that we just dropped, I believe late yesterday. It's this one here, so I would encourage everyone to watch it. It's super important. Drew is a super smart guy. It's this here. I'm gonna put the link in the chat box here so you guys can watch it. But he manages a healthcare related ETF, and it's basically what we talk about in the podcast is essentially how AI is a big part, how healthcare is a big part of AI. And if we're looking for the next sort of opportunities in AI, the application layer in healthcare is maybe difficult to sort of beat, right? Drew is incredibly smart, really incredibly smart. So I would encourage everyone to watch that podcast if you want to learn more about the opportunities in that space. So let's talk about a couple things here today. First, I would like to remind everybody what the correlations are. So let me start off what we do every single morning. I know it's getting old, but I still know a lot of people just don't want to hear this, even though they're underperforming. Here's the fact. Uranium is up 88% on the year. Gold miners up 120. Mag 7 stocks are doing well, but up 20, right? We think that the Mag 7 situation is likely going to deflate. And we think that because they're now basically, the Mag 7 situation is such that they're basically now lending to each other, right? Because they can no longer fulfill the future growth that they promised in terms of raw numbers, at least not at the moment. That might change in the future. So if you look at some of these deals, if you look at what NVIDIA is doing, so it started with Intel, right? Essentially the government, made Intel kind of give part of its ownership to the government. Government then basically sold those shares on, right, to NVIDIA. And essentially NVIDIA is now also buying part of AI, C3AI, or whatever the other guy is. Unbelievable what's happening in terms of the CapEx. However, they're now basically creating fake demand by doing deals with each other. I'm not calling fraud here, please hear me right, but this is typically what happens very late, because the alternative at this point, of looking bad and causing problems is probably too big for these people. And there's a lot of things that are afoot here. So that's just my view. I'm not calling fraud. I'm not saying these are bad companies. I'm simply saying that's what's happening now in our view, and it's a very dangerous zone that we're now entering. Right? We're now entering the oxygen is almost evaporating. Right? There's almost no more oxygen up here. And it doesn't mean it can't continue for some time. It still can, right, until there's zero oxygen left, until we all faint, they all faint. But right now, that's what's happening. And this is pretty normal when you have these massive CapEx kind of cycles. So anyway, that's what's going on there. And I would just keep that in mind. Then also at the same time, and this is very much part of this, right? Why are these assets rallying? Well, I'm going to recreate this chart for you guys right now one more time because I think it's that important. It's the situation is this. So NASDAQ goes up, right? So I'm going to make these line charts in case anyone hasn't seen this yet. I'm going to make it a daily chart. So NASDAQ goes up, right? Gold goes up. I'm just throw the ETFs in here. And it's all happening at the expense of, you know what it is, right? It's the dollar index, the dollar, right? So as these things are going up, it's in large part because of basically deficit spending and fiscal spending and easier monetary policy, right? Before we continue and we start looking at a couple of important things, first of all, I would like everyone to take note of this chart. It's the most important chart I can show you. Secondly, if any one of you are like to trade options, we are doing a session today at, I believe it's 12 noon Eastern. Maybe Christian, you could edit that so people know that it's Eastern time, where we're going to teach you or show you a strategy that we like to deploy for generating income in a portfolio with an options trade, right? So it's an educational series. We do these educational series every week. This week we're focusing on options for income-related type of stuff. So if you'd like to join that, it's totally free. You can join it by clicking the link right there that Christian was kind enough to put into the chat box here just now. So that's what's going on today at noon Eastern. That's 9 a.m. Pacific time, which is, I think it's 5 p.m. London time, and so on and so forth. So let's move on to two more things. I want to show you a couple of bank stocks, and then I want to actually, let's first start with the stuff that people want to hear about, which is probably the things that have done very well. I want to quickly show you, and I don't know how many of you have noticed this, but we like to measure the market in three ways. We like to measure the market in terms of trends, right? So gold, for example, it's been a long bullish trend. Then we like to use momentum for quicker trades. And then we like to find when things are either extremely overbought or extremely oversold. And you will see, for example, that Barrick Mining Corp got extremely oversold over the past couple of days. It's still not done getting overbought. It could still get more overbought. But I'll show you an example of one stock that did get very overbought just last week. And we actually mentioned this to members at the time. And you can see Intel, which is what this is. When it got overbought, it then basically so far has now promptly dropped 10%. Last time Intel got overbought to that extent, it then ended up dropping 27%. That's not my forecast. I'm just telling you that there are times when it's the absolute worst possible spot to buy something, and we want to make sure we don't fall into that trap. Also, when a stock gets this overbought, there's a certain option structure we like to do. Just like when something gets very oversold, we like to do a specific option structure. It's an income-oriented trade, which, by the way, coincidentally happens to tie in with what we're going to be able to show you in our options income session again today at 12 p.m. Eastern time, which is 9 a.m. Pacific time, and so on and so forth. So that's what's going on. There's a lot of things getting very overbought. Things like uranium, which are up like we most recently added it, I think in a couple months ago, and I think it's up like 20% since then. So a lot of things are getting very, very lofty. That does not mean they can't continue, right? There's a big difference, but they are getting again in that thin layer of oxygen up there. You look at something like I think we talked about AppLovin yesterday. Again, I still have to laugh every time I hear that name. It sounds like McLovin. But this is APP. Again, great AI name, and I say great in the sense of there's a lot of people, sort of focusing on a name like that. And this is not a natural progression. So when you have price discovery, markets kind of move up and down. Even NVIDIA, I would argue, has price discovery, right? So you can see NVIDIA, big move yesterday on the back of what I just mentioned earlier. But I should also mention that NVIDIA is the same spot it was late July, so it's gone nowhere now in about 2 months. But which, by the way, it can break out from here, right? But the point is, it hasn't done anything in 2 months. But even NVIDIA has price discovery. When you see something like APP, there is, over the past few weeks, there's no price discovery. This is algo-driven, passive investing, vol targeting funds, all those kind of things that are basically bidding the stock up regardless. The risk with a stock like that is not so much that it can't go higher, it's that when these algos are done buying, the stock doesn't just go down 5%, it'll go down by like 30, 40% like this. And you can see this happens all the time in a name like that, right? When those algos stop buying, in that case, quickly 20%. Here too, like 58%. So this is the kind of stuff that we can look at. So that's that, and I want to look at JP Morgan quickly as well. That's a stock that I keep pointing out. I mentioned it yesterday, and I want to tie it into Citigroup as well. So again, JP Morgan, just be mindful of where that stock is right now. Just be mindful of the fact that it is at at the very upper end of its longer term, and I say longer term in this case, multi-year uptrend. And then there's, this is a monthly chart, sorry, I have to make this a weekly chart so you can see it here, which has a correlation of 1 to the S&P 500, which I showed you guys yesterday. So you can see here, if we just overlay the S&P 500, you can see JP Morgan and the S&P are the same chart. So I'd be careful with that. Last but not least, as far as this is concerned, I'm going to quickly show you Citigroup. This is shares of Citigroup, which are currently trading 30% above their 200-day moving average. If I were to quickly add in a couple of the 200-day here, just so you guys can see this, then you would come to this. I drew the lines here. The red line here is the 200-day moving average, and typically when Citigroup trades about 30% above its 200-day moving average, which it is right now, it tends to stall and mean revert. That happened, when it was 30% above, here, or below, right above or below, and we're once again at that spot right now. So this is the kind of stuff. Quick question to address. Nicholas asking, when do we buy DoorDash? I have absolutely no idea, but let's see if we can see what's going on. This is Dash. Well, the question is, Christian, what's your time frame? Let's address this question because it's a good question, and I don't know your time frame, so, Nicholas. So maybe you want to let us know what your time frame actually is. Here's the question, right? So, from a trend following perspective, right? Oh crap! I don't have it on there. From a trend following perspective, this is a stock that's been in a bullish trend for a long time, right? So it's not like it hasn't been in a bullish trend. The question is more near term from a momentum perspective, which I'm going to assume is probably your question because most people tend to be a bit more short term these days. Here's what's going on right now, okay? This is using our momentum indicator, Nicholas. And what you can see is that the last time we had a buy signal in April, the stock then rallied about 47%. Then we had a sell signal that probably got stopped out for a small loss. And now we have a new buy signal since the 9th of September. And that has a free profit target around $272, okay? So yeah, so if you're looking at weeks at a time, you're looking at momentum, right, as opposed to trend. You just have to, so I'm going to say the free profit target is around 272 right now. The trailing stop currently we have is around 256, Nicholas. Just keep in mind, if you're looking for multiple days to multiple weeks kind of thing, what you're going to do, Nicholas, you're going to miss out on the big trends, right? So for example, if that's your time frame, you probably would have you can never make more than whatever X amount is, right? X amount depends on the stock, but you're always going to be chasing the latest sort of hot headline or momentum signal. And that's okay, right? Just keep in mind you're always going to be limited by how much money you can make. Because if you look at this to a longer term perspective, and I'm going to quickly end on this before I now have to move on to the next thing. If you are going to be looking at, for example, let's just look at gold. I think that's a good example, right? If you are going to be more patient as an investor, which I would encourage, quite frankly, beg everyone to do, you're going to be able to take advantage of things like, this is just gold. I could show you tons of stocks, but this is gold. You can see the green background color. So gold is up 80%, and that's gold, right? Gold up 80% is like most stocks being up multiple hundreds of percents, right? So you could have traded 50 times along here, right? And probably never made as much money as just buying gold when it turned to a bullish trend and still hold it, right? Or, you know, put your favorite stock in here like Palantir or whatever. So Nicholas, just keep that in mind when you're looking at the market. And we do momentum trades, we do it all, right? But I just want people, because I don't think people realize how powerful it is to just be a trend follower. So with that in mind, I got to jump. If you're a Market Rover member, we'll see you guys in about literally like 1 or 2 minutes for our quick Tuesday scanning session. And Trade-a-thon starts at 9:45 Eastern. And of course, at midday today Eastern or 9 a.m. Pacific, we're going to do that options income strategy session. And we'll see you guys back here tomorrow morning. Thumbs up, like, and subscribe. I'll see you guys tomorrow. Thanks.